Are you looking to invest in real estate and be successful with it? Today I am sharing the successful real estate investing tips that I have learned since purchasing my first property back in 2005. I am Tiffany Thomas, a financially free millionaire. If you're looking to become one of those, make sure and hit that like button and hit the subscribe button, and we're going to dive right in. My real estate investing strategy has been to live with roommates, or at least one roommate, and then also purchase rental properties for the long term. So I focus on buy and hold. I will purchase a property, put tenants in there, and rent to them over the long term, and then collect cash flow every single month. So that is the type of strategy we are going to be focusing on in today's video. All right, the first tip that I want to share with you in order to be successful with real estate in buy and hold properties is to focus on the long term. I get a lot of people asking me, well, should I buy right now? It seems high, interest rates are high. I don't know, maybe I should wait. But honestly, if you are purchasing the property for the long term, you plan on buying and holding it, then you can really purchase a property pretty much any time and make it work because you are focusing on the long term. And over the long term, rent prices are going to increase and the property will appreciate over time. It will go up in value over the long term. So honestly, I'm not too concerned about what is happening in the short term. Also, there are tax deductions that you can take when you purchase a property. But while we are focusing on the long term, we do want to run the numbers to do our homework on the property and make sure that it will be a profitable property for us. For example, when I purchased my third property, I decided to move into that property. I was able to put less money for a down payment. I only put 5% down instead of the typical 20%. And if you are not moving into a property, most lenders will require a 20% down payment. That's why it is nice to be able to move into that property because you can have a lower down payment. And yes, you will pay PMI, private mortgage insurance, and that will just be an amount that is with your mortgage payment, but it's not going toward paying off your mortgage. But for me, it was definitely worth it to pay that PMI amount so that I could get into the property. When I purchased that property, things were crazy in the market and they got crazier and crazier later on. But I wanted to be able to purchase a property then. So I didn't want to wait even longer to save up for a full 20% down payment. So I ran my numbers. I knew that I could afford the PMI, and for me, it would be worth it. I was putting roommates in that property, so they would help cover the mortgage payment. So while yes, there may be certain times of the year that are going to be better to purchase a property, if you're really focused on the long term, then I wouldn't be so concerned about the short term. And you can also refinance your property later if you need to. So take a look at what your payment would be and how much you could rent that property for, or how much you could charge roommates to rent out a room for. And make sure that the numbers do work for you. And again, since I'm looking at the long term, I'm not so concerned about creating a $1,000 profit every single month. If it's a couple $100s, that is great because I know it's going to appreciate in value over time and rent prices will continue to rise over time. And when purchasing my third property, I ended up selling that property later, which if you want the details about that, I will leave a link above to that video. But the home had actually doubled in value in about 5 years. So it was definitely worth it for me to get into that property when I did. And tip number 2 for successful real estate investing is that you want to realize the better renters you have, the better experience you are going to have with your rental properties, or even your own property when you have roommates. So be picky on who you rent to. I like to purchase good properties in good locations, so I usually have multiple people applying to live in the place. So I would definitely do a background and a credit check on the person. And I like going to meet them in person at the property so that I can get a feel for how the person is, and I can even take a look at their car and see if their car is clean or if it is completely full of clutter. And as I'm showing them the place, I just ask them general questions, but it gives me a feel for what type of person they are. I'll ask them where they work right now, how long they've been there, if they currently live with roommates, things like that. I just try to get a feel for the person. And I haven't always been the greatest at this. When I had purchased that very first rental property, I had rented to someone that turned out to be not so great. And I was more lenient on her background and credit check because I wanted to get the place rented out and I was new at this. She told me she was going to be better with her money, that she was just going through a financial situation and getting a divorce, things like that. And so I ended up renting to her. She got behind on rent and behind on paying her late fees. And I ended up taking her to small claims court. So be picky on who you rent to, because honestly, if your renters are good renters, you are going to have a much better experience with real estate. And just as a side note, that experience with taking one of my tenants to small claims court did not deter me from continuing to invest in real estate. A major problem with just one tenant out of 50 is pretty good odds, which is part of the reason I'm sharing these tips with you, because I have learned a lot by doing this. And I know a lot of people talk about how bad real estate investing is, that people have destroyed the place and they never paid rent and they wouldn't leave the house. But it's a lot more exciting and fun to talk about the bad things with real estate. People aren't usually talking about the good things like, oh yeah, my tenant paid rent on time again this month. It's not quite as exciting. There's no drama there. So real estate investing is not all bad, even though that is maybe what you are hearing. And comment below and tell me if you have heard of a bad real estate investing story. And the third tip to successful real estate investing that I want to share with you is to make sure and have your tenant or roommate sign a contract. You want to make sure that everything is laid out, all of the details. When rent is due, if there's a late fee after a certain date, if they are responsible for taking care of the yard, if they need to put the utilities in their name, what happens when the contract is up, does it automatically renew or do they get to go month to month for an extra fee? You want all of those details laid out in a contract so there is no question later on. To give you an example of someone who did not sign a contract, I have a friend who rented to another friend. She was just her roommate, and they had a verbal contract. She would give 30 days notice when she was moving out. But after months and months had gone by, the roommate decided to move out, and she gave the landlord, my friend, a 2-day notice, I think. And so my friend was really scrambling to find another roommate. And honestly, their friendship took a dive. So just make sure to have everything in writing. That way, both parties know exactly what is expected. And to give you another example of having a signed contract, when I took my previous tenant to small claims court, I ended up winning at small claims court because I had the contract and she had signed it. So I had a copy of that for the judge and for both of us. And the judge flat out asked her, "Is this your signature? Did you sign this?" And she said, "Yes, I did." And so she was legally bound by the terms in the contract. If there was no contract, I would not have been able to take her to small claims and win that case. Successful real estate investing tip number 4 that I want to share with you is to find a property in a good location that is in good shape. Especially when we are buying for the long term, we want it in an area that it is going to appreciate, that it's going to go up in value over the long term. And for me, I'm not really a handy person, so I like finding a property that is already in good condition that I can rent out immediately. That way I can start collecting that cash flow right away. And also, when you are purchasing in a good location, you will usually be able to get better tenants. And of course, you can charge more for the place. So while yes, it may cost more to purchase that property, the value will go up even more and you'll be able to charge even more and most likely find better tenants. At least that is a strategy that has worked for me. The 4 properties that I had purchased were all within about 15 minutes of each other. So it made it really nice when I had to go to one of the properties and take care of something. I didn't have to drive very far since I manage all of my properties myself. But they were all in a really good location. They are close to the freeway, but not right next to the freeway. And they're also close to the canyons. They are central in the valley, so they can go further south pretty quickly or even further north. So figure out where a good location would be for you. And then tip number 5 to successful real estate investing is to realize that it gets easier as you go along. When I purchased my very first property, I was super nervous to do that, and I had a ton of questions, and I think I lost a lot of sleep during that process. But when I purchased that second property, it was a lot easier. I had seen the benefits of purchasing my first property and having roommates in there, and I knew I could have success with another property. And I did start small. I did a 2-bedroom, 2-bath condo with that second property because I was still a little bit nervous nervous about this. But after I started having success with that property, I purchased my third property and I moved into that property, left my old roommates at my old place and got new roommates at my new place. And it was a ton easier to purchase that third property. And then since my fourth property was a single family home and my other two were townhomes and then a condo, I knew there would be more work associated with that property. So I did feel a little nervous about that, but it was still pretty easy because I had already purchased 3 properties. So the more that you do it, the more that you purchase properties or the more that you invest your money, the better you get at it and the easier it becomes. Of course, I am still learning a lot of things along the way, but I took action. I bought that first property. I bought another one and another and another. And I learned as I went. And yes, I made mistakes. And yes, I still make mistakes. But it is so worth it. Investing in real estate has made the biggest difference in me being able to become financially free in my 30s and become a millionaire at age 40. It is important that we actually start investing. We honestly don't have to know everything. If we did, there's no way I would have started investing in real estate or in the stock market. We learn enough to get started and then we can improve along the way. And I know there are a lot of other tips to successful real estate investing. So comment below with your favorite real estate investing tip. And if you found this video helpful, please hit that like button and share it with someone else who would like to hear this information. And hit the subscribe button to subscribe to my YouTube channel and hit the little bell to get notified on when I post new videos. And if you want to see even more content from me, make sure and check out the videos on the side of the screen. Thanks so much for watching. I'll see you in the next video.